Hello, this is Martin from seekedge, channel for learning about investment and trading. Welcome to the daily market technical analysis show, where we look at how the market performed the previous day and how we can plan ahead, to have a better trading plan for the next day. And this analysis is for July 22nd, Thursday, 2021. So, as we do every day, what we do is we look at all of these parameters that's listed down here. The first half of them, most of them are coming in the charts, and the second half would be based on the data, right, and other information, right, and then we'll wrap it up with some actionables. So let's get into the charts and see what exactly happened in the market the last day. So this is the Nifty 50 charts. But you see here, it's a bearish candle clearly. We can also see a longer wick or shadow on the bottom of the candle, which shows that there was some bullish support that was seen there. Let's look at Bank Nifty. It's clear bearishness. So it closed near to the lowest, the lowest price of the day, while Nifty did not close like that. So it's slightly more bullish. But overall, both are clear indication of bearish moves that happened on the previous day in the market in Nifty and Bank Nifty. Let's get into the lower time frame and see what exactly happened. So the 20th trading day, it was a big down move, right, till 12 o'clock. It was a big down move, right. So if you look at the down move points, it fall down 170 near to that kind of points, and then so this move was following it. The global markets were also down, so it was a follow-up down move that happened, and then at the afternoon 12:30 it started moving up, right. So this is the another of the V-shaped moves that we can expect, right. So it moved from there, and then it went 100 points up, then it could not further move up till the day's starting, and then it fall back, gave up half of that up move. This is what happened in the Nifty. Bank Nifty, we can see the same thing that happened. It did a down move, right, of how much points is that from the previous day? 700 points it fall down, and then it tried to recover. It reversed once the European markets were open. It did reverse, but it could not go much. It just made 200 points of gain, and then lost almost all of that, and then went back to, right, the total loss of 660 plus points. It's more bearish than the Nifty 120 points lost in a day, right. So that was the second day, third day of bearishness, and the first day after a big fall from the channel support, right. Same in Bank Nifty also, right. The fall from the channel support can be clearly seen, but you can also see that it has taken a support as usual on the same place where it used to take support 4, 5, 6 times in the last 1 month, right. It settled there at the support zone of 30 or 15,600, that level, right. And then Bank Nifty also, it took the support at 34,600 to 34,300, that support zone, right. So right now it is at a very critical neckline support zone once again, right. So Bollinger Bands, what do they say, right? Let's clear all and then put in the Bollinger Bands, and you can see that it is still we are consolidating. Bank Nifty, still we are consolidating. If you say the zigzag move is what consolidating, it's moving up, going down, moving up, going down. It's not breaking up too much, it's not breaking down too much. That's why it's known as consolidation. So now once this level is broken, the previous swing low level of 33,900 is broken, then we have a problem. We are probably splitting. The Bollinger Bands may start to expand in the negative side, instead of what it started doing that earlier in the positive side. Or it could go up and then do the zigzag some more time. We don't know. It all depends on the next trading day. What is it? Whether it would be able to hold on to this level or not. It depends on that. Right? Until then, there is no point in predicting. So that's about the Bollinger Bands and volatility expansion. Support resistances remain the same. We are at a support level that we have seen. No difference in that. Momentum is something that so momentum has fallen down and slipped back in the last 3 days move. The last 2 days slipping from the channel, it has fallen down into the sideways zone. And if you also it has fallen down, it has reached almost to the support zone, right? The lowest support 40, right? So if RSI 40 is hold, it can bounce up. Right? Similarly, if this can bounce up, if it may dip a little bit and then it can bounce up, right? So there is there is a momentum support that is there down below. Unless and until that is violated, you don't need to worry about momentum. But momentum is sideways as of now. How about trend? Nifty trend has crossed out the bearish zone once the slip has happened. Bank Nifty bearish zone. So momentum on both indices is on bearish, and the momentum is on the sideways and the trend is on the bearish zones. That's what we understand from the charts, right? So that's about the charts, the levels. The levels that we need to watch is whether we are breaking this 15,500 or not. Similarly, whether we are breaking this 34,000 level or not. Can we hold this level? If we are holding this, we may still continue to be not into a crash, right? Let's now look back at the data of the open interest analysis and see what happened in the futures. On the last trading day, if you see the open interest for the futures contract, what does it show? It shows that it's a clear short buildup that has happened on Nifty and Bank Nifty. Also, it is showing a clear short buildup. What are the option open interest data showing? Option open interest data for 22nd July 2021. Right, the PCR ratio is bearish 0.54 for Nifty, and the highest call writing is seen as 15,800. Remains the same since 1 month, and the highest resistance after that is 15,700, right? And supports are seen at 15,500. So the expiry could be between 15,000 and 15,500 and 15,800 can be clearly seen. PCR is bad. Bank Nifty PCR is 0.47, even more bearish is what open interest data is showing, and Bank Nifty, you can see that highest all resistance is around, and highest one is 37,000. Then the major one nearby is 35,000, which also was given away the other day, and next to that you have 34,500. So these are the three. So 35,000 and highest support put writing is seen as 33,500. So it would be between 33,500 and 34,000 or 35,000. So whether so the range would be of between 33,500 and 35,000 somewhere over the expiry, right? Whether it would give up this 34,000 or not is a big question, right? You can see that there is a lot of additional call writing that has happened at the 34,500, right? If you look at the bottom part, the change in open interest, right? A lot of additional. So there is a green that is seen. So this 35,500 is seen a larger fresh change in open interest that has happened here, and a lot of unwinding of the supports at 35,000 also is seen there. So it is a bearish graph that you see here for Nifty as well as Bank Nifty, right? And but here also you can see that 15,700, a lot of call rating as well. That means this is going to be a major zone. Conquering 15,700 is going to be tough, right? Even though 15,800 is there, conquering this itself may be tough. New writing has come in there, right? That's the open interest data. Now let us look at what happened in the VIX, India VIX, as usual. No, so there is a difference here. The India VIX has shot up. There is a spike that you can see in the India VIX, right? So it had gone to the very lowest levels of 10 the previous day. It had gone very low to up to 11 point something, right, on 16th July. That's a few days back it had gone to that level. Now we can see that from there onwards you are seeing actually a small spike from last 2 days, right? So whenever market is going down, VIX will shoot up. So VIX shot up to 14 levels and then settle back at 13 0.3 levels. So VIX is spiking upwards, right? So VIX is spiking up, which may give surprises to option sellers, right? Now FIDA participation, what is happening is Fyers were selling, I would assume, right? So Fyers were selling heavily. 2,800 crores rupees of selling happened over the last month's funding. You can see that Fyers has been continuously buying since last almost 1 month or so. There's hardly only 3 days they have been, 3 or 4 days so they have been buying. So FIA buying is a concern, and DA is continuously FIA selling is a concern. Sorry, no. So DIAs are domestic institutional mutual funds are buying consistently. They did only a sell off only on one day, except all other days they have been continually buying. Right? They are actually holding the market up. Sector watch. Let's look at the heat map of the action on the last day. You can see it's a red everywhere except for Hindustan Unilever, which has got good weightage in the index. Right, Mardios is there, but they don't have too much weightage. So only performing was Hindustan Unilever and the IT stocks, Infy and TCS. That's only saved the market. BANKNIFTY is full red, right? And you can see that only FMCG Hindustan Unilever is only one. There is a result that is coming, I would believe. Right, so there is only stock that performed, right? So let's look at the sector charts and see what is happening there on the 1-day time frame. If you see, we talked about divergences. We saw a weekly divergence and a daily divergence, also multiple negative, multiple bearish momentum divergences are seen, which could pull the market down further. Is what index charts of the IT index is showing. Metal, so you have to be careful on that index on taking stocks in the IT, at least for some time. It is bullish, but we can see that it's holding the candle bullishness. So there is no guarantee that the bearish divergence would always work. It may not work. It may negate and then can shoot up. It can also happen, but you have to be cautious. Metal index continued to be was in sideways and has gone into the bearish zones. So there is no hope in metals as it's auto. I'm sorry. So metal index is continues to be in the sideways zone, and the auto has fallen to the bearish zones. That means auto and metal. Auto is turned bearish. Pharma was bullish, but it slipped back to the sideways zone slightly on the last day performance. FMCG continued to be in the sideways overall. Right? Media we don't track, is falling down. Energy is falling down. We don't track all those. What we track is reality. So reality was shooting up. There was a breakout that is happening, but the last day, if you see, there is a smile correction. So there is a chance that it can come back to this support zones again, and then can bounce from there. But overall, reality is bullish, right? And IT is bullish but cautious, right? Auto is down bearish, right? Pharma is also slightly bullish, but just gone to sideways. So pharma, IT, and reality is continue to be in the bullish sectors. Others are all sideways or bearish. Let's get into and see what is the currency pair USD INR and others are doing. So if we go and see the dollar index, dollar is strengthening day by day, continues to strengthen in the last 4-5 days. And the currency pair that trades in NSE had done a breakout of the triangle pattern and then failed and went bearish the other day, right? So we expected to have a resistance at the channel top. Probably that is what may be happening, or it may attempt to hit that once again, or it may attempt to hit there and reach there and then bounce back the downward journey of the channel, right? Because it's a channel top. So, or it could break out, right? So overall, the rupee is weakened to 75 nearby 74 and 0.6 levels, and is most likely to retrace back for some time, is what we are expecting in the coming days. But there could be some more time that may be spent at this channel top level, right? Now how about gold? Gold is doing some consolidation, some corrections in the last 4 days, 3 days after a big up move. right? So it probably is finding a support zone at the currently, it may halt, it has halt the move at a support zone top. It was at the bottom of that support zone and it has climbed that on the top and retracing a little bit, and then I would assume that after some consolidation it may further move up to the channel top, right? Right now it's in the upper half of the channel, so it continues to be moving up, although there is some correction that is seen, right, towards the immediate support. Now global markets had done a big correction um, previous week, previous days, right? That is why our market went down, primarily because of the inflation and COVID fears, right? But you can see that everything has turned down. The European markets and the global markets have all turned green. Now, Nasdaq did 179 points of recovery, green big wide range candle, right? S&P 500 also recovered. Dow Jones had fallen great, but recovered entirely, right? So the US markets are up and in green. So that worry should not bring our markets down. At least the COVID-related fear should not bring the market down. Maybe something else if it is. But FII participation is of concern. So that's the global markets, and that's it. So if we just wrap it up, we are at a very critical zone on both the indices, right? We are at a major support zone. If that breaks too much, then we may have a problem. So that is all the charts and the candle patterns and the price actions and the Bollinger Bands, support zones, everything indicates that we're at a very critical point of support. So our consolidation ends there and we will turn to bearishness in all sense if we break that, right? So probably we may bounce up from here, right? So overall the momentum is sideways and the divergence are there was a weekly divergence which worked out, right? And trend is bearish, right? Open interest is showing their bearish charts overall. Volatility is spiking upwards from the bottoms. Fyers are selling like anything. Rupee is weakening. Gold is going up. Global markets had some problems, recovered and back into green, right? So you have to cautiously wait and do the action according to how the price lets you know is what the next day's plan should be ideally. Do not take any fresh positions unless and until you get clear indications. If you already have positions, whenever your channels up, your support resistance levels are breached, you have to get out of the trade, right? Without you'll always get back a chance to re-enter if it is positional. But if there are levels like 15,000 or 15,500 which you have, your stop loss is placed right according to where you entered, right? You would have to get out of it, right? Buying on buying for investment on the, when it is going down is also a good idea, right? But not taking any fresh positions either side, long or short, is the ideal approach. You have to wait and watch it for the next day. Intraday, you just have to play based on how the market price action is happening on the as compared to the previous day's high and low, right? But swing and positional, you have to be wait and watch how the market is responding, right? How the market is whether the market is respecting the support of 15,600 and 34,000 or not, right? Once that is clear, then accordingly you have to take the position. So that's a wrap up of the market, and I hope that you will find some points at least discussed in this 20 minutes talk, which could help you make your own trade plan for the next day, right? And if you like it, please hit the like button and share it with others. We need more subscriptions. We have very few subscriptions. Hope you'll do that, which will help us motivate with more providing with more valuable good contents every time. It will keep us motivated if you have more likes and more shares and more subscriptions. So please do that, and happy learning and happy trading. Bye.